and we're going to talk about counter trend trade when price is trending bullish. All right. So let's say that price is when the trend is bullish. Okay, my bad. Let's do this, right? So from down over here, price is moving up, price is moving up, price moves up, and then boom, we have a resistance formed, and we have another resistance formed right here, bearish candle, more bearish candles coming down, like this, right? Awesome. Now, all of a sudden, we have a support formed right here. Now, if you're trying to take sells in a bullish trend, again, you have to wait for support formed, right? Now we have a support form at this point. Now, if we think that the price can go down, you have to wait for price to break support, right? In essence, you have to wait to see whether you can get a bearish candle forming like this, closing below the support, because one candle closing bullish after bearish candle, boom, you got support form. Now, if you want price to go down, you have to wait for a candle to close below support in a bearish form, and now you can anticipate the next candle to continue pushing down like this. And in this case, we're going to wait for, an impulse entry to break this low and go down, because now we're going to say that, okay, even though the trend was bullish, we created support, and support meant that price should go up. But if the next candle didn't break the high right here, and it broke the low, closed below, maybe we can be fluid in the markets. That's what market fluidity is, right? Maybe we can be fluid in the markets, and we can identify that, okay, maybe we're not trying to go up now because now we've broken support. Maybe there's a high probability for price to go down. Okay, the more you see this happen, the better you're going to get at it. This is a perfect world example. There are also variations of these, right? There are a lot of variations of these. The candles can close with small bodies. The candles can close with, big bodies and stuff like that. So let's say you got a support right here, and you got a bearish candle that's closing like this, and then you can get another bearish candle that, closes like this. So then you can anticipate price to go down. And as we talked about impulse entries, you can go over that, and zones and ranges, that if let's say this candle closes away from the support, what are you going to do? Are you going to take a sell, or are you going to wait for price to retrace? Because the further away we move from a zone, what happens? The further away we move from a zone, the higher the probability of price to retrace, to retest that zone, right? So you have to wait for price to print in a way that you can understand. So if we're closing like this, then you're like, okay, you know what? There's a high probability that price can go down. And always remember, there's a lower probability we can go right back up, So you're always trying to trade when there's a higher probability, for price to continue moving. Now, this was for uptrends. Now, obviously for downtrends, it's the opposite. So we're going to go over that now. So let's say, for example, you have candles pushing down. You got a bearish candle, you got another bearish candle right here, and then you have another bearish candle. People love when price moves down, right? We love when price moves down. And then we have another bearish candle starts to move down. Beautiful. We have a nice trend going on over here. 4 hour expecting to go down. Daily is expecting to go down. You're like, awesome, perfect. This works amazing. Now all of a sudden, you have a bullish candle forming right here. Boom. We got support formed. In a downtrend, okay? Don't forget, this is a DT, downtrend. This is a downtrend. Now, whenever you have a downtrend, and if you're trying to take a buy at this point right here, and it's a very, very volatile pair, let's say it's gold or pound yen or whatever high volatile pair you trade, and it's a downtrend, there's a possibility that if you take a buy right here, the next candle respecting this high, it can continue pushing down. You got to keep that in mind. So whenever you're trading the trend, don't fight the trend. Wait for the trend to show you some signs, right? Because having good signs is a good form of trading. So now let's say you got a support formed, next candle starts to move up, next candle starts to move up, and then we have, boom, we have a resistance form right over here. This is a 30-minute resistance. This is a 15-minute maybe, but I would say a 30-minute or a 1 hour resistance. We've gone over these situations over and over and over and over again. right? Now you have a resistance formed. There's a high probability for price to go down. Now another thing, you have to make sure that this is a tradable range. I would say like minimum 30 pip range. If this is a tradable range, you can have an easier move going down. Because whenever price makes a low, there's an 80% chance that price will retest that low. You have to wait. Whenever you have a downtrend, don't fight the trend. Don't take a buy. Wait for price to create resistance and then continue down. Now, sometimes what can even happen is that without price retracing all this way up, what can happen is that you can have, let's say, a bullish candle form, and then you can have a bearish candle form like this, right? Now what do you have? Boom, you have a resistance formed. Now is this enough range? Well, candles with no wicks, what wicks, we already talked about that. Now, is this enough range? Do you have enough range to take a sell? Absolutely not. Now price is just consolidating. Same thing goes for when price is trending bullish, and retraces and whatever. Bullish, retraces, create support. Yeah, right? The same thing. So at this point right here, there's no sells at this point, right? The only thing that you can do is that if a next candle, let's say we break above this resistance right here, we've broken above resistance on a 30-minute time frame, so that means we've broken above a strong zone because 30-minute zone are stronger. Now you can anticipate the next candle to correct the move that we had earlier on, which came down. So that's clean traffic to the left-hand side. Makes sense? Now this is where you can take a counter trend trade. In the same scenario, okay, now follow me right here. In the same scenario, let's say that this candle closed away from a zone. Let's remove this arrow. Let's say that this candle closed away from a zone. Can you take a buy at this point in downtrend? Absolutely not. Because we moved away from the zone. There's a high probability for it to do a retest and then potentially go up or come down, and this whole thing becomes a fake out. We've talked about fake outs as well. So whenever you're trading, you have to wait, or let's say whenever you're trading a downtrend, you have to wait for a candle to create some sort of a resistance. Now this resistance can form with a bigger range or small range. If it forms a small range, this is maybe what, like 10 pips? What are you going to do with 10 pips? Nothing. Then it's better off to wait for price to break support or close below or give you some more confirmations that we can continue to push down. But again, if you're trading counter trend in a downtrend, you have to wait for price to break resistance. No, form resistance first and then break resistance. So if we break above this area, then you can say, okay, you know what, maybe now we can correct that move. Okay? Now we have to go over this again. Go over this class again, this virtual class. These are very basic concepts. These situations do occur in the markets, and the more you familiarize yourself with these concepts, only in times of volume, they will play out in your favor more often than they're not going to play out in your favor. All right, so trend trading, as simple as it may seem, it really is that simple. But the main idea is you have to wait for candles to print in a way that you can recognize for you to take a trade. So we're going to go over that again. If you're trading an uptrend, you have to wait for support to form. If you have a support form, then you can take a look at how the support is formed. Has the candle closed, a big body candle, small body candle, a bearish or bullish, whatever that is, but the support is formed. If you're trying to sell in a downtrend, you have to wait for a support form, and then you have to wait for the support to break with confirmation. Same thing goes for downtrends. If you're trading downtrends, you have to wait for a resistance to form, right? If you formed a resistance, then you have to wait to see if you have any, candle confirmations, candle closing bearish for you to take a sell. And if you really want to sell, or if you really want to buy in a counter trend when it's moving down, you have to wait for resistance to break, right? The only way you're waiting for a resistance to break is in a downtrend to maybe correct that move up. Or the only way that you're waiting for support to break is in an uptrend to correct that move down, right? Important concept. Go over this virtual class again, maybe 3 or 4 times. Some of you may already know these things, but it's always a good idea to go over these simple concepts, because sometimes we miss certain things. Sometimes we ignore certain things, and that one quick thing can light up a bulb in our head, and I'm like, oh yeah, you know what? That actually made sense. That really did make sense. So good luck. look for these situations in the charts only in times of volume. You know, you got your pre-London, London Open, pre-New York, New York Open. Well, pre-New York volume has shifted a little bit, you know. So NYSE, London close, good luck.